Hey, good morning, everybody. Welcome to Hump Day, Wednesday. It's hard to believe we have pretty much passed halfway through July now. As we get ready to go and start talking with Dave, I do want to remind you again about some of our free reports and just make sure you're aware of them. But we got a free report on retirement strategies. You know, the one thing about retirement is it's kind of a one and done deal. If you don't get it right the first time, it can be a painful time in life for you. And so we've put together our 5 retirement strategies, things you need to consider as you head into retirement, start planning for your retirement. All you have to do to get your free copy is text the word retirement to 863-285-3815. Or here on Facebook, you can click the link right above this video post to take you right to it. So again, thank you for joining us today. If you like what we're doing, please like our page, Statler Financial Services, and share this video. Dave will be with us in just a moment.
105.7 Light FM. Hello there. Glad you're with me today. It's 8:40. We're at 20 before 9. It's time to check in on Wall Street. How are the stock markets doing this morning, domestically and internationally? We always check in with Phillip Statler at Statler Financial Services in downtown Sebring for a bird's eye view as what's going on. And he's here today. Phillip, good morning. How are you?
Hey, good morning, Dave. Yesterday, we kind of started out in the good side, not by a lot, but at least it was green. It sure didn't end that way, did it?
No, it didn't. I think I'd probably call it pink. 24 points down on the Dow is no great thing. Do you write it off as profit taking from the recent highs, or is it the fact that the financials really were kind of a disappointment as far as what the prices did after beating on the earnings reports?
Honestly, I think it was a tweet yesterday, Dave. I think it was mid to late morning, maybe even lunchtime. I saw a tweet from Trump saying the China deal is not as close to what people think it is. And that's when I started to see things go from green to red.
And nobody's paying any attention to any tweets from Trump except for the one that got the congressional attention. I didn't even hear about that. The mainstream press didn't even mention it yesterday.
Yeah. So that was kind of, I think, when I saw that, and then I looked and they were green before I looked at that, and then afterwards they were starting to trend red. So I think that may have been actually the catalyst that did it yesterday.
All right, I saw a little knee in the curve. I just kind of figured that we got up to the point where some major investors were looking at profit taking, but a tweet, well, I never thought I'd say it, but a tweet is probably the single biggest market driver that can go these days, isn't it?
It definitely seems to be that way, Dave. It can go one way or the other. All it takes is the president to say something.
Yeah, I never thought I'd be saying, watch Twitter to find out how the market's going to go. Well, we start out the morning by talking about housing because the government data dump for this morning was building permits and housing starts. Both were off substantially in June, and worse yet, both were worse than expected, I gather, huh?
Yeah, they were. I mean, here's the deal on housing permits. My tip sheet didn't give me the exact number, but it said it was the lowest it's been in 2 years. So that tells me it's not good.
No.
Yeah.
It was down 6.1% in June. I didn't write the exact number down, but anytime you fall that much, you assume it's a disappointment.
Yeah. And then housing starts, where we're starting construction, that was a miss too. They were expecting about 1.26 million, and we got 1.25 million in housing starts. And I was reading an article yesterday about commercial real estate and how they're seeing a slowdown within the commercial real estate industry. So we're seeing some slowdowns in real estate. Mortgage rates are back up a little bit. Mortgage applications were down last week, 1.1%. Who knows? Is this just one data point like you and I talked about before, or is this the start of a fourth quarter decline? I don't know.
Absolutely. The only thing we can really take away from all this is it's been 6 months to a year now that you and I have seen a pretty steady trend toward mostly disappointing construction information. And as we always say, the construction business handles such doggone big gobs of money that the domino effect to other sectors of the economy, it becomes a pretty decent canary in a coal mine measure of the economy as a whole.
It is. It really because it takes on so many different characteristics, right? I mean, it's jobs, it's materials, it's just a lot of stuff that's tied up in the real estate industry.
Absolutely. And we continue to draw that picture, though. While we're not in bad shape, we're definitely leveling off. Interesting. We had another big financial go into earnings season with another report today, and it was kind of the same picture we got from the other big financials. Bank of America beat. Bank of America made gobs of money, but Bank of America isn't making as much money in loans as people expected them to, so traders aren't rewarding them this morning, right?
Well, that's right. I mean, we look back, it's last quarter, they were 3 cents ahead of what they were expected to be. They came in at 74 cents a share. Revenue was just above what they had forecasted. But again, but what helped them a lot was their strong retail banking performance. Their net interest income is what really is hurting them this morning in the marketplace. It was slightly below what was predicted. And that's one of the things that they look at. So they're trading down about 1/3% before the market opens up today.
And an observation I made yesterday, we're digging deeper into the quarterly reports out of these companies than we normally do. As a rule, hey, they beat the earnings per share, they beat revenue, same store sales if it applies, they beat that, then we're going to buy the stock like chiclets. They're actually digging into these banks' reports and saying, no, you're not making money in the right places now. And that seems like a little bit of a change from our behavior in previous earnings seasons.
Well, I think the higher this market gets, the more the PE ratios start to change. I think the more people start to dig in, analysts start to dig in to find out, okay, because now they're making bets on future. And so they need to know and understand what the future looks like in those industries. And so you have another bank that came out, Dave. The PNC Financial also came out. They beat by 6 cents a share. Revenue again was slightly above what the street had forecasted, and they had the opposite of Bank of America. They had a rise in interest income, better than expected, and better loan volume than was expected. And they're trading up this morning a little over 0.5%.
Well, they're getting rewarded for getting all the metrics right, even the metrics that we don't expect the analysts to be watching too carefully, right?
Yeah, exactly. So, yeah.
One thing you need to do as a takeaway off of Bank of America, the biggest headline, top line information on their report was that because they are such a heavy consumer bank, their beat was based upon that, and you mentioned it, based on consumer banking. And that, kind of in contrast to the housing starts we've got, is one of the good signs for the economy, isn't it?
It is. It definitely is. It seems to be a good place right now. Hey, I got two other reports that came out. I have United Airlines and CSX, and they kind of went opposite directions here. So United Airlines, they had a pretty good quarter. They came in at $4.21 a share, which was about 12 cents better than expected. Their second quarter revenue beat estimates also. Their seat mile, their revenue per seat mile, which is one of the airline metrics that they like to follow, was up 2.5%. So a lot of good things happening there. They actually have gone out and bought some used Boeing 737s since they've had to ground their 737 Maxes. They've gone out and bought some other 737s to kind of replace them and help make up that difference.
Let me guess, they were on sale.
Well, they didn't buy the Maxes.
Oh,
they grounded the Maxes, so they're trying to find something to help in the meantime to take in at least some of that capacity.
Okay, now I understand. I was going to say clearance sale on 737s would probably be appropriate right now.
Yeah, and that probably wouldn't have been a good investment. So United Airlines, they're trading up a little over 0.5% this morning. Kind of the opposite of what's happening with CSX today.
I noticed that they were on my loser list. What happened to them anyway?
Well, they missed. That's what happened to them. They missed. They missed their profit by 3 cents a share. They came in at $1.08. Their revenue missed the estimates as well. So they're just having issues. And they've related back to the impact of the trade relations between the U.S. and China. So less stuff coming in, less stuff to freight across the United States, less revenue coming in. And so they've cut their full year revenue forecast, as a matter of fact. And so they're getting beat up today. They're down about 7.3% this morning.
You know, it's counterintuitive until you explain it that way. You know, a domestic air railroad company saying imports are hurting us, but yeah, there's less to load on the trains. I suppose so. That makes sense, doesn't it?
It really does. And so we look at that and say, okay, transportation, one's doing well, one's doing not so well. One relies more on trade than the other.
Understood. Setting the table again for the morning. It was pink to slightly red yesterday on Wall Street after the Trump tweet about the China deal. Dow was off by 23 points. They were they were the gainer of the bunch by comparison, only 0.09%. NASDAQ and the S&P both were down over 1/3% yesterday. More sensitive stocks and more of them to get a broader picture of the market. How are we doing 45 minutes before we open trade this morning, Phillip?
Well, I will tell you, it's been up and down a little bit. When the housing start numbers came out, we saw it dip into the red. It has bounced back just a little bit, according to my quotes right now. The Dow's basically even. Well, they're all pretty much even, Dave. The S&P 500 and the Dow are basically flat, and the NASDAQ's up $4. You might as well say it's flat too. Gold and silver gold's down about 1/4%. Silver's up about 1/4%. Silver's making a run. They're up to $15.72 an ounce, getting closer and closer to that $16 number. And then we've got crude oil up 1.18% this morning, but much better than where it was yesterday when you and I looked. It's $58.31 a barrel.
Yeah, I was going to say morning over morning. That's an improvement, even though it's in green ink compared to last night, isn't it?
That you're right, and that's what you and I care about.
Yeah, we watch it morning to morning, folks. The world markets, evidently, they follow Twitter more carefully than we do because Japan, China, and all the European markets all off this morning, not precipitously, but they are trading in red ink this morning, halfway through the European day and after the close in Asia. Phillip, somebody need help trying to straighten all this mess out and put it on focus for my individual investments. How would I get a hold of you to make an appointment?
Hey, let us help you through and coach you through retirement. Give us a call at 382-0037. Let's get started with our financial x-ray analysis of your current portfolio. And then to get our retirement strategies report, 5 strategies folks need to know when they start looking at retirement, just text the word retirement to 863-285-3815. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings.
On our sister station, News Talk 730 a.m., which is also the address.com for streaming it, every single word. Phillip, thank you so very much, and we will catch you tomorrow, all right?
All right, Dave, sounds good. Thanks, buddy.
Appreciate you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop it. Hey, I'm back. Thanks again for joining us. I really do appreciate you. To get that free report, text the word retirement to 863-285-3815, or on Facebook, click the little link right above this post. It'll take you right to the page where you can request your free report. And if you like what we're doing, please share the video with your friends and family. Hey, until tomorrow, have a great day, and we'll be back with you again tomorrow morning.